wife. So as you can see, she's on the I Am Athlete podcast, and I helped her as well make money. She's making about 2K a day. All right. So I also helped Michael Vick's wife learn trading as well. And you guys can see some of the people that I've helped inside of the chat. Now, these are very old screenshots, and I got way more, but well, I don't say very, these are 2 years ago. Oh, this one is like last year. This one is 2 years ago, but I'm just showing you guys proof of how effective I am at changing somebody's life and helping them win inside the stock market. This person made 121K and everything else, right? Now, I know what you guys are asking. What's in it for me? Everything. We're going to teach you. As you can see, consistency. This is what I teach, folks. So manifestation is powerful, folks. This guy's still in the chat, and this was 2 years ago. He was like slowly but surely getting consistent. Shout out to Aristotle. Aristotle, I'm ready for my 1K day, staying patient. And boom, this is 6/30, 2022. And look what this guy does. July 1st, he hits his first 1K day, literally. My first 1K day. So manifestation is powerful, folks. Is trading a little spiritual for all? Who's spiritual in here? Put in me. Who believes in God? All right, I do too. It doesn't matter what religion or anything you are. Belief is very, very important, and manifestation is powerful. So I want everybody to understand something. All 800 people in here, trading is for you. I know people will be saying, "Oh, this ain't no." Now, it's a lot of skills that I would say isn't for everybody, but investing is for everybody. Trading, maybe not. Like day trading might not be for everybody, but this is day trading mostly that you guys see. If you see somebody post a calendar with a bunch of consistent profits, they're more than likely day trading. But swing trading is what I do now, and I'll show you guys a little bit of that. So who am I? Put a no if you don't know who I am. Like put a no. Who's new to me? Okay. Nice. That's cool. That's cool. Nice to meet you guys as well. So I'm going to give you, before I get into the lesson, I want to give you a little bit of background on who I am. I was born and raised in Atlanta, Georgia. Put a yes if I have a southern accent to you. If I sound southern to you. Do I sound like I'm from Atlanta? Okay, cool. No, barely. Cool. Some people say I do, some people say I don't. 7 years investing experience. I started when I was 21 years old. I've been doing this for 7 years. I am 28, 6 years active duty. September 9th, 2014 to March 20th, 2020 is when I got out of the military. So I joined when I was 18 years old. I learned how to invest while I was in. I am a serial entrepreneur, best-selling author, and the leader of the new generation. All right. So that is me. I'm Louis Vuitton down, and guess where I was when I took this picture? Shout out to Tampa. I was in Tampa for the Super Bowl, and they're going through a hurricane, so prayers to Tampa. Now, before I joined the Army, I worked at McDonald's. I worked at Dillon's, which is owned by Kroger. So if you guys don't know, Kroger owns a bunch of uh, grocery stores around the country. Like if you're from California, they call it Ralph's, but it's really owned by Kroger. And then it's called Harris Teeters in some places, and it's called what else is it called? For something for less, I forgot what it's called. But in Kansas, it's called Dillon's. Then I worked at a daycare, Fred Meyer's. Yep, it's called Fred Meyer's and Fry's in Arizona. So you guys know what I'm talking about. Food for less, exactly. You guys know exactly what I'm talking about. And then Walmart. I worked at Walmart pushing carts. So am I'm a millionaire, a multimillionaire, a eight-figure millionaire, but I was once a 725 per hour person. So I'm just like you, and I've learned this skill. And how old was I in these pictures? I was 16, 17. Uh, I was 15 in this one because I couldn't get a job yet. Then when I could, this is my first job at 16, 17, 18. So I was 18 years old in this picture. And then I joined the military. And what was I? I was an information technology specialist. So I was not an idiot. I was actually a 25 Bravo. and I know IT. I'm certified in Security Plus, A Plus, CCNA. So even before I was about to become an investor, I what this balance sheet says, supply and demand, because they're making more money and continue. And then Tesla, you'll see that Tesla has been stagnant. Let's go look at Tesla. Tesla was once not profitable. We go to the financials. So you guys, I don't have 2019 pulled up, but at one point Tesla was not profitable. This was the year they became profitable. And then they became profitable again. And then now they're kind of stagnant. So guess what their chart is going to show? Stagnation, right? Tesla. See that? See how they're moving sideways? Because they're no longer showing. So when they went from, being not profitable to now up like this, they were good. But now they need to figure out how they can be better than their highs. You see what I'm saying? Trailer 12 months, they're not making as much as last year. So even though they're still a great investment, but that year over year growth is slowing down. All right. So you guys get that part. Who here knows how to now find out whether a company is profitable or not? But to me, it's that simple. Okay. Now let me teach you something else. Whenever, let's just say a company is profitable, right? And this is a prime example, PDD. This is one of these trades I just got into. And if you don't believe me, I didn't just get into, but I called to my chat and I made 40 racks from. So we go to my Discord and I'm going to show you guys real quick. In the Leaps and Long Term account, I posted, I was up 40K on PDD right here. So we made 200%, 220% on this play, PDD. I'm up 40K. Now, when did we get in? We got in this year, August 28th. August 28th is when I called it in my chat. And if you don't believe me, all you got to do is go from user King B Ari, which is me, and then PDD. All right. And then you can go see whether I called this or not. But I'm pretty sure you guys already know how I'm rocking. Is it this one? I called these so many times. Right here. Boom. Right here. All right. This is where we got in. Now, why did I call PDD? Because for one, I got a significant drop. So here's the part that I want to teach you real quick about going long. We're going to take this right here. So from the most recent high or the 52-week high, what is the 52-week high? Right here. This is the 52-week high. So I take this, what is called info line right here, and I go from here to all the way down to where it is. And what does it say? This stock is down 45%, 46%. Not only is it down 46%, but it's on a trend line, correct? Now I'm going to teach you guys about that. But basically, you see we got a touch here, touch here, touch here. All right. So this beautiful stock is down, yep, about 46%. Now, what is a technical bear market? I know I spelled this all wrong, but there we go. A bear market is what? A prolonged drop of investment prices. A bear market happens when a broad market index falls by 20%. So think about it, folks. In order for us to be in a bear market, there has to be a 20% decline, correct? But right here, and I'm going to show you guys, we're going to get back to PDD, but let's go to SPY. This is the technical. So right now we're in a bull market. But as you can see, this is the bear market. This is when they were talking about inflation, when inflation was going up high. This is why we dropped the first time. Now, how did we know we were in a bear market? Because this is the most recent high for SPY. And what was it down? Right here is a technical bear market. You see how it's down 20%? this is when we're in bear market territory. And then what I like to do is I like to invest when we're down about 30%. But SPY recovered at 27%. See that? A 27% decline. And this is the COVID drop right here. This is when COVID dropped. You see that? We're in 2020. How did we know we're in a bear market? Because this is the most recent high at that time. And if you take the info line down, we what? Drop what? 35%. And this is the trade war when Trump, well, who remembers this in 2018 when Trump was battling with China and stuff? That's why we dropped here. And what was that? Another bear market, 20% decline, but it bounced right at 20%. And then this could be a bear market if, you know, let's see. Nope, not really. Only had like 11% decline. So who now knows how to see whether we're in a bull or bear market? Put a me. Put a me if you guys know how to see whether we're in a bull or bear market. You take the most recent high. So guess what, folks? Guess what I can't wait for? I can't wait. So right now it's about time to start scaling out of your trades, of your longs, right? Or buying puts against or hedging. So guess what, folks? We gotta wait until about right here. So right here from the highs is 460. We technically won't get back to a bear market. So I know what you guys are asking me, Aristotle, when should I get in? When should I get in? You should not get in unless we're at a 20% decline from the most recent highs. So I just gave you guys game. You guys can keep going to trading view up here, applying this info line, and this is when you got to wait to the highest point. You got to keep doing it, and you must tell yourself, hey, I ain't buying shit until we're at a 20% decline. All right. Now, here's some more game. What you need to do is scale in, folks. So let's just say you got $10,000, right? So I'm going to scale in at 20%. I'm going to put my line there. Here's my first average in. Then I go down to 30%. Or you can go every 5% drop. But I like to do, you could do every 5%. So 25%, my net scale in. Or you can do every 10%, depending on what type of person you are. 30%. All right. This is when you know what I'm saying? So what does this mean? If I got $10,000, 3,000 as soon as it gets to 20%. 3,000 when it gets to 25%. 3,000, I'm in full size. So now I'm up. So now I'm in my full size position. Never go in full size during the first drop. Always put in a little bit, put in a little bit, put in a little bit. Put a yes if you understand that. All right. That's how you scale in. You never ever go full size unless it's just like a great investment. Like when Meta, I ain't gonna lie, I went balls deep. When Meta was like down here, when it was 73% decline, and then I went to go look at Meta's balance sheet and I saw that these guys were down at the time. All right. Their financials, they were down when I got in. This was 2022. So here's what I didn't understand. Meta made $10 billion more than they made the prior year. And you had people on social media saying, and then they end up taking a decline because they invested a lot of money into the metaverse. But I'm like, this is Meta. They own half of the world, meaning there's 8 billion people in the world. 4 billion people use Meta platform of some sort, whether it's WhatsApp, Facebook, or Instagram. So that means Meta is so powerful that all they got to do is drop a t-shirt and they'll profit. Like Mark Zuckerberg can wake up tomorrow and be like, what do I want to sell today? This. So you can never defeat a company like this who got half the world's attention. So data is also important too. You guys have to know who owns the data. Right now it's Meta. Meta and Google own the data. So you can always buy these guys on the dip because they will always figure out a way to make profit because all they got to do is send one blast email, one blast text, and we're all back in the game. All right. Apple kinda, but it is what it is. So these guys were down 76%. from their highs. So that's why I bought them. I'm like, this profitable, well-established company with 4 billion users is down 76%. So think about it, folks. Usually they're telling you to invest, you know, now, I'm going to be honest with you guys. You might have to take more of my classes so I can show you guys when exactly to know when exactly to buy the dip. There is more to it, but it's a lot to explain in this webinar because I got to give you guys 7 high probability setups. But I'm giving you guys the game. You guys pretty much get it. Buy profitable companies, go to their balance sheet, put a yes if you understand. You get my flow here. Wait for a bull market for SPY. Wait for a bear market first. We got to wait till it's a 20% decrease from the highs. All of that, right? So none of you should be buying right now. All right? None of you. Now, we got the long term. Now we got to go into candlesticks. Put a me if you don't know candlesticks. Put a me. Perfect. So if I can teach you guys candlesticks, you guys have to leave me a great testimonial, okay? Let's get it. Not if, when, because I'm him. I've been teaching this for 7 years nearly. All right, so let's go to our blue. Now I'm going to put up a few price points. We're going to type in, let's do 13, 10, 8, 5. Now, why did I do that, folks? For one, what you have to understand, folks, is candlesticks are a visual representation of what is going on in a particular time period. Okay? So, what does this mean, folks? This means that before we keep going, I got to go to this chart real quick. Now, if we're on the daily chart, so what does that mean? Every candlestick represents one day. If we're on the 4-hour chart, every candlestick represents 4 hours that you see. If we're on the 1 hour chart, every candlestick represents 1 hour. If we're on the 5 minute chart, every candlestick represents 5 minutes. Okay, folks? But notice how it gets the shorter time frame you go, the more candlesticks you see. Correct? And then weekly chart. If we're on the weekly chart, every candlestick represents 1 week. Put a yes if you understand what I'm saying here. That means every single one of these candlesticks represents the time period you are on. So it is a visual representation of what is happening during that time period, correct? So I had to get that out the way. Now, why did I do these? Because let's just say we are on the daily chart. All right. So that means in one day, this is what this candlestick represents. It opened at the price of 8. Okay. Went as low as 5. So when it opens, this is how it looks. And then it went as low as 5, went as high as 13, but closed at 8. So the relationship between the open and the close is your real body. And in order for it to be a green candlestick, the open must be higher than the close. So what does that mean? It opened at 8. So, and then anything outside of the open and close is called your shadows or wicks. So it opened at 8, went as low as 5, went as high as 13, but closed at 10. And it makes it a green candlestick because the close was higher than the open. Okay. So that means within one day, this is my visual representation of what happened. And the real body is the relationship between the open and close. Okay, so one more time. In one day, it opened at 8, went as low as 5, went as high as 13, closed at 10. That's what makes it a green candlestick because the close is higher than the opening price. So it doesn't matter if we're on the 5 minute chart, 1 hour chart. This is a visual representation of what happened. So all these candlesticks are doing is saying, okay, that is what happened. But instead of me going in and looking at real numbers, I get to use this candlestick to give me a visual cheat sheet of what happened. Now, this too, same thing. It opened, so we're going to use these same numbers. It opened at 10, when as high as 13, when as low as 5, but closed at 8. And what makes it a red candlestick is because the close is lower than the open. It opened at 10 but closed at 8. And remember, anything outside of the open and the close is our shadows or wicks. Okay? Put a yes if you already kind of understand it. We're going to keep going, but put a yes if you get my drift. All right, we're going to keep going. Don't worry. Don't worry. I got you. We're going to keep going because I got a system to make sure you get it. So big green and big red candlesticks. This represents big selling and big buying pressure, correct? All right, big selling and big buying. So what does this mean? That means that we know that if it's a big green candlestick, it open here, when as low as here, went as high as here, but closed here. And we know that if it's big red candlestick, that means big selling pressure. So we know it had to have opened here, had to went as high as here. The high and low won't change. The low, but it closed here because it's red. And remember, the red candlestick, the close must be lower than the opening price. And the green candlestick, the close must be higher than the opening price. All right. So remember, we got to get you guys set for these we got a high probability setup coming. I'm warning people. We got some coming. So doji candlestick, what does that mean? So let's do it. And let's talk and let's use it in bull and bear. So this is when the open and close are virtually the same. All right. So it opened here. The bulls shot the prices up, but the bears shot the prices back down. Then the bulls bought the prices back up to close near the open. Okay. So now I'm using terms now. Here, what do we have? It opened here. At first, it was a big old red candlestick, right? And then the bulls shot the price. The buyers came back in control, the bulls, to make it close near where it already opened. Okay. And right here, this was once it opened here and it was once a green candlestick for whatever time period we're on. It doesn't matter what time period. And then the bears shot the prices back down to close near the open. So who gets it? Put a yes if you understanding even more now. All right. And this is just an extension of this. We're going to keep going though. So now you have what is called candlestick patterns. And I'm going to teach you guys. Now, I don't use all of these. I only use a few of these. So we're going to get into it. Pin bar, high probability candlestick called a pin bar. So what does that mean, folks? It's this is going to be a good one. So you guys got to write this down. You guys got you a gold medal. I just gave you one. We got a gold medal. Now, what does this mean? We're going to start with a bullish pin bar. This is actually the most high probability candlestick pattern on the market. So you may want to pay attention to this. All right. So let's just say we have 2 days in a row. Now I only play these on the daily and the weekly chart. So let me go ahead and write that down. On the 1 day and 1 week chart. All right. So we got trends here, a candlestick trend. So we had a bear day, and a bear day, correct? And next thing you know, this was once a bear day as well. So it started off bear as well. All right. So it opened here. Then the bears shot the prices down, but then the bulls shot the prices back up to go this high, but end up closing here. So what does that mean, folks? You see how this momentum is almost like a slingshot. You get what I'm saying? The Bears were in control, and then the Bulls, this candlestick pattern is kind of like a slingshot. Or if you're a wrestler, You know how a wrestler goes at the ropes and then he comes back and then boom. See what I'm saying? All right. So it's this is all psychology. Remember, candlesticks are all visual representations in psychology. Okay. So the psychology is this candlestick pattern right here can reverse this trend because at the bottom of this trend, the bulls pretty much slingshotted the momentum. You get what I mean? And vice versa. Let's say we have over here a trend. We got some bullish trend here. Bulls 3 days in a row. We banking, right? Oh man, it looks good. We got a bullish day, bullish day, bullish day, and then we almost had another bullish day. So it opened here, and then the bulls were once in control. This was once a green candlestick, but next thing you know, the bears came back in control to not only go as low as here, but close here. So what does that mean? That means that made the momentum shift this way. Put a yes if you're understanding what I'm saying here. It's all about psychology and momentum. Okay. So this reversed the pattern, and then this reversed the trend. And I only play these on the daily and weekly chart. Now, they are not called hammers, they are called pin bars. Hammers must close at the high. You will never see a candlestick close at the high like that. You will always see some type of wick on the outside of it. All right. Now, these are like lollipops with rocket ships attached to them. That's what I like to note to see these as. Or an astronaut bending their knees as low as they can and jumping up in the sky. Or a wrestler, you know, pretty much, going to the belt and coming back and hitting somebody. So now we have here a candlestick pattern. So we're going to have our line and boom, we have a form of support here. So why? And I love buying pin bars at supports. So what is support? Support is your floor. Resistance is your ceiling. So as you can see, we have a floor here. We have a touch of candlesticks here and another touch. But you notice at one point in time, this looked like it was about to break down. But the Bears came, I mean, the Bulls came back in control to pin it here. That's why we call it a pin bar because we like it pinned at supports. So this is almost like a wrestler, right? And look what happened as a result of that. Boom, it shot up. All right. That's what happened as a result. Okay. Put a yes if you understand that. We have a form of support and you can get in this pin bar at support and it reverses the momentum. Okay. Oh, you guys actually pretty smart. For a free class, you guys are smart. Usually people have to pay and then they get it. You know how society works, but you guys getting it. So boom, we have another form of support. Touches here, touches here, touches here. And what do we have? This looked like it was about to break support. It looked like the Bears were in control at one point and the Bulls came back in control. And look what happened as a result, momentum shift. And this is real screenshots, by the way. So I know what you got asking me. Are these real? Are these compatible? Yes. These are live examples. Now, everybody state their favorite one out of this. Which one is your favorite out of these two? Red or green? More than likely the green one. Now, remember, folks, Jolly Ranchers is the only candy where the red is better than the green. The Laffy Taffy, the green one is better than the red, in my opinion. The red is still good, but the green is better. These right here, to me, the this is better. Now, what do they both have in common? I'll tell you two things. Before I get to the second one, they both have in common. They tear up the roof of your mouth. Can we all agree on that? That's the first thing they have in common. You eat too many of these, the top of your mouth is messed up. Now let me tell you the second part they have in common. They both matter. Okay? Okay, they both matter. So although we may favorite the red or the green, doesn't matter which one you favorite. They both are great. And remember, we need a pullback in order for pin bars to be successful. So we got a trend and then we have a pullback. Now, why do we need a pullback? Because that shows a momentum shift. So don't buy a pin bar right here. This doesn't count because it's in the middle of a trend. This is not going to be a pin bar because it's in the middle of a trend. What I like is pullbacks. So notice how the red and the green both are great. So although we like the this one, we like this one too. And please don't write me paragraphs. I'm teaching. I won't. You're one person. You got to pay attention. All right. We're not going to stop and cater to you. You might as well just watch the presentations. Let's keep going, folks. Now, right here, we have this one here too. We have a pin bar. All right, why did my thing get lost? There we go. Boom. We have another pin bar, folks, right here at support. And then we have a bearish pin bar at resistance. So here's the ceiling here. But I personally don't like to play. I don't like to buy puts. I am a bear. I am a bull, folks. So I'm going to be honest with you guys. I am a bull. And I also want to tell you guys this. How do you enter pin bars? You buy when it breaks above. So as soon as it breaks above 15 cents above highs, that's where you buy. So I know what you guys want to know. Where do I buy this? How do I get in? 15 cents above highs. You mark the highest point of that wick, and here's the entry point when it breaks that point. All right. So then here, same thing here. Now, if you enter, I want to also tell you guys this. When you enter these, even if, let's just say you would have got in right here, your stop loss is down here, folks. So here's your stop loss. So don't get out, even though you would have probably be down a little bit. Let's just say you would have entered here and you're down. You're not supposed to get out until it breaks below here. So a lot of people don't know that. And here's another example. You see what I'm saying? You get in here when it breaks and do not get out unless it breaks below here. And that is why I tell people to scale in. You get what I'm saying? Because you always want to. And even then, I would scale in like this. First entry here, second entry half of the pin bar, third entry down here. I always tell people when they first start trading, scale into thirds. All right. First entry here, second entry half of the pin bar, third entry down here plus stop loss. And trust me, it can bounce from here. So I know what you guys saying, like, why would I add here? Trust me. Sometimes they like to test the bulls and come down here. So you just gotta know how to play these. Always scale into thirds. And yes, this is the daily time frame. I only play these. See that D? That equals daily. You'll keep seeing the D. See D? Daily. All right. See that D? Daily. I only play these on the daily time frame. So now we're off to our number two. So you guys got the pin bar. Put a yes if you guys got the pin bar. Somebody said you are a great teacher for real. I appreciate that. All right. So this is called the engulfing pattern. This is our second high probability pattern. Okay. So write that down, engulfing, or take mental note, whatever you got to do. Take a picture, screenshot. You might want to do it. Okay. So now what do we have, folks? We have what is called a downtrend. Oops. I need to get my pen out. So we have a downtrend, correct? It's almost the same as a pin bar, but it's just different. Downtrend, downtrend, and then we have a small candle. So remember, folks, today is larger than yesterday. The body must engulf yesterday's body. So imagine you hug a bear. Wouldn't a bear engulf you? Because their whole body is just, he's taller and wider than you, correct? So it's the same thing here. We have a bear day, then a small day, correct? And then boom, we have the today. What happens? It eats the trend alive. So the open and the close must be taller, and so the open must be lower than their open or close, whatever. You get what I'm saying? And then this, so the body counts, not these wicks. The body must engulf this body. It must be lower and higher in order for it to count. Now, this one is the same way. We got a bullish trend. And remember, I like to buy these at supports when it's a bullish engulfing. And how do you enter these? You enter these as the same way we would do a pin bar, the high. You would enter these as soon as it breaks the high. Now, I know what you guys asking. Aristotle, can I enter before it breaks the high? You can, and you may make money. But remember, folks, one thing I had to learn is do by the book. I invest by